The government's looking to raise up to 11,000 crores from the sixth tranche of the CPSE ETF. The issue manager has been tasked with another job before the ETF is open for subscription on Thursday. Let's get more details on this with Vishal Jain. He's the head of the ETF and fund manager at Reliance Nippon AMC. Vishal, good having you. Thanks much for joining in. Now, I reckon this tax incentive that comes in to ETFs by and large, which of this nature is an added bonanza of sorts for investors. But what's the kind of response that you're anticipating to this tranche?
Sure. So the ATC benefit, which was announced in the budget, at this point of time, at this point of time, as the finance bill has not been passed, it will not be applicable for this issue. Secondly, what will happen is that this is the first time in an ETF that an ATC benefit has come in, and therefore there's some operational work that will need to be done, from the stock exchanges, which might take about 2 or 3 months or so. So therefore the ATC benefit at this point of time will not be there for investors, but possibly in the subsequent issues, the ATC benefit will be applicable. In terms of demand, we're seeing robust demand coming in, to the current tranche as well. We find that every tranche that we do, the popularity of the ETF just keeps increasing. If you look at the kind of retail response we had got, say in our November tranche, which was the third tranche that we had done, we had subscriptions from the retail side to the extent of about 2,700 crores or so. When we did the following tranche, which was in March this year, the retail numbers went up to nearly 3,300 to 3,400 crores. So every time we find that a new set of investors, come in, and the number of investors and the returns that people have got, investors have been quite enthused with the product, over the last 2 or 3 years.
Excuse me, my understanding was maybe wrong, but in which case the other benefit then might come in wherein people do not have to stay locked into a ETF. They can come in hoping for that initial discount that you are anyways giving, that 3% discount, and maybe once the gains start coming in, they'll do well. The other overarching belief, Vishal, that a lot of people have is that when you plot what the PSU index has done over the last 20 years, we are back at levels from where the big PSU rally had started about 18 years ago. The question is there belief within the AMC that with the government spend and the increasing professionalism of some of the PSUs, if not all, there is merit in a public sector enterprise run ETF or a fund over a period of the next 3 or 4 years?
Well, we think so. If you look at the basket of stocks, these are 10 stocks. They're the best, government stocks, that are there. Guys like ONGC, guys like Indian Oil Corporation, NTPC, Coal India. So these are all respective leaders in their fields. They're extremely well run companies, well managed companies, very high dividend yield paying companies. If you look at the kind of valuations that PSU stocks have in the market, they're far lower than, say, the Nifty. So the CPSE ETF, if you look at the PE ratio, it's about 8.5 or so, whereas the Nifty trades at about 15 PE ratio. But on the contrary, if you look at the return on equity of the index is similar to that of the Nifty, which is about 12 to 14% or so. In addition, I think the big benefit that investors get here is the fact that the dividend yield of this particular basket is very high. The dividend yield of the CPSE ETF is nearly 5% as compared to 1.25% of the Nifty index. So if you look at all these three parameters and add, on top of it, add the fact that the government is giving you a 3% discount, it's a good value proposition for investors, I would tend to think.
Okay. You, of course, will have to, and I don't know if you've already done it, but I presume you'll have to, because of the IOC weightage issue, you will have to go out and buy some shares from the open market to ensure that the government weight doesn't fall. Can you just elaborate on a bit? Because I don't think something like this has happened in any of the past issues, right, Vishal?
That's correct. So currently the government holds, I think, about 52.18% or so in IOC. They're allowed to go up to 51.5%, in this current tranche that we're doing. So possibly whatever the government will give us over and above that, if we need more shares of IOC, we will have to go and purchase that in the market.
Okay. One last question, Vishal, before we thank you, and I understand it's busy times for you. What would you tell for people who are listening into this conversation or hear this conversation once again on social media during the course of the next couple of days? What's the kind of return expectation that people should have with the presumption that anybody who's subscribing to this would stay subscribed for the next 3 years?
See, remember one thing. I mean, though I'm forced to all the time compare a CPSE ETF with the Nifty, but technically it's not the right thing to do. Remember, it's a theme, and this kind of a product should never be the core of your portfolio. It should be the smaller part of your portfolio. You have to remember that, look, these are extremely good companies. They're a good set of well diversified companies. The government is talking about our economy becoming a $5 trillion economy in the next 4 to 5 years. There's tremendous amount of stress that is being put on the infrastructure segment, and therefore these are the companies which are part of the core transformation agenda that the government is talking about. So if India is going to grow, I'm sure that valuations of these companies and therefore the ETF will reflect in terms of good returns as we go ahead.
Okay, Vishal, we'll leave it at that. All the best, and thanks so much for taking the time out and speaking to us at Bloomberg Quint.
Thank you so much.